Hey, welcome to Patterns and Profits. I'm Tom Gentile, resident pattern trader. If you've ever felt trapped by the emotional roller coaster of news, opinions, and meme-driven hype, well, you're not alone. Here, we focus on patterns, not panic, on profits, not predictions, and based on a proven, repeatable approach that cuts through the noise and helps you trade with confidence. If you want my videos, education, and special reports the moment they're hot off the press, well, then sign up for my newsletter. It's absolutely free. Welcome aboard, and let's get started. All right, welcome to Patterns and Profits. I am Tom Gentile here, your number one pattern trader. I'm here to help you discover patterns, repeat, and profits that add up. Like, share, subscribe to the channel, hit that notification bell if you want all these videos when they are uploaded, as well as access to this live event every single week. One more thing, this is not investment advice. Past performance is not indicative of future results. All right, so you see the screen next to me? This is what I want to cover today. I want to talk about latest news in the markets. Bitcoin did something that a lot of people didn't expect it to do. What has it gone up about 30% in a week? Off of its lows. I believe it has. It is continuing to charge again today. So we'll touch on that briefly. And then I want to do a year-to-date stock comparison. All right, so we're going to look at year-to-date numbers, buy and hold crowd, and us. And I think you're going to be really impressed with what you see when I do that. So a lot I want to cover with everybody. So buckle your seatbelts and let's get started. So stocks suffered a pullback week last week. We should not be surprised about that at all. I've been talking about August and this yellowness that's all over the calendar. There is still strength in numbers, and not every stock's going to go down when we see the market becoming uncertain. There are stocks that move higher, and right now that rotation still seems to be in tech, in AI, and mega cap. All right, so that's the first thing that the big takeaway I get as I come into Monday morning. Bond market. So the bond market gapped up last week, and all eyes are on Walsh's keynote comments, which are coming out this Friday. So we've seen the bond market now doing some buybacks on long-term yields, and that really fueled the fire for the third piece of news that really set the tone for last week, and that is assets. Not just mega caps, but metals, the metals markets, and cryptos. Big jumps last week for both hard and digital assets. I want to get into all of that. But here's the big one, all right? The big move of the week has to be Bitcoin. So when you take a look at this chart of Bitcoin, and this is the iShares Bitcoin ETF. So I'm looking at this, and there are 4 reasons immediately why we see Bitcoin and IBIT going from the lows last week near 35 to topping 45 today. All right. First of all, we're getting more and more clarity on the Clarity Act, and that is bringing optimism back into this space. The second thing that happened was the Treasury expanding their buybacks on long-term yields, and that really got the party started last week. And then once we got into the high 30s and got above 40 on the IBIT ETF, that actually put us well into the 70s in Bitcoin. That 72 to 75,000 area, a lot of short sellers got squeezed. Now, when short selling happens, what happens when short sellers get squeezed? They are forced to buy their positions back to close, and that creates a buy in the market, which even fuels more fire to the upside. And then finally, because of what's been happening in number 1 and number 2, ETF inflows are back. That means that we're seeing more buying than selling on these ETFs like IBIT, ARKB, and there are probably a dozen others that saw more inflows. They haven't seen inflows now, probably significant ones. We haven't seen significant inflows. You got to go back to before Memorial Day to see the last time we saw some real inflows happening in this area. So this is a big deal, folks. All right, it's a big deal for assets. You take a look at the gold market. It too has made some major comebacks, but this is the one that takes the cake for the week, which is Bitcoin. All right, so where do we go from here? Coming into the day, this is what the money calendar is telling me right now when I look at ETFs. And ETFs, again, are really going to be comprised of those assets, those exchange traded funds, which represent kind of the haystack. All right, where if I look at stocks as the needles in the haystack, I'm looking at ETFs as the haystack themselves. So we start off with about 67% bullishness. We end the week on 57% bullishness. Again, no clear sign that the majority of stocks want to move higher just yet, and I believe you're going to see that for the foreseeable future. But there were two names that came up, which is interesting because if you were to look at the Dow, the S&P, and the NASDAQ, right now you're going to see the Dow in positive territory, and you're going to see the S&P and the NASDAQ in negative territory. Well, seasonally right now, the Dow seems to outperform. DIA is showing some performance in the last 10 years. It's 10 for 10 with an average of just under 4% between now and mid-November. But I want to talk about the other one that's on here. The other one is XME. And if you take a look down at the bottom of the screen, XME is showing me a 59-day seasonal cycle, which is averaging just under 6% average return, all right, between now and mid-November, right? And we take a look at this, it also tells me that I have a 90% historical accuracy, and the power meter, something that we put together which gives us an idea on how well that trend is happening, is also positive. Let's look at some more details on XME for a moment. So if we take a look at XME, the energy ETF from now to mid-November, it really looks like this. So this is the last 10 years of this pattern. Now, for those of you that are new and you're looking at this for the first time, what this is every year for the last 10 years, if you would have bought XME around today and you were to sell it somewhere around mid-November, what would it have produced for you? Well, back in 2016, it was an 8% return. 2017, 1.68. 2018, we saw a 9.77% drop, the only loser in the last 10 years. But since 2018, what have we seen? 2019, winner. 2020, winner. 2021, winner. 22 and 23, even in the bear market, we saw this eke out some moves to the upside. Last 2 years have been significant. XME recorded a 12.61% return in 2024. And last year, all right, buying this ETF this time last year and selling it mid-November, we're talking about a 14.6% return. Folks, that's on an ETF, okay? Now, if you remember last year, we weren't dealing with Middle Eastern tension like we are this year, right? And also, keep in mind, XME is an energy ETF. It's not oil, okay? It's a list of energy stocks that comprise this particular ETF. So, all in all this does is confirm to me the information we just talked about, 90% accuracy. Now, that 5.98% average return is when you add all of these up, including the loser. But when you see what's going on year after year, and this is moving higher and higher, this is suggesting that if we continue to move on the track we're moving, we should expect a double-digit return from there. The chart on XME looks like this, right? So we've seen since the beginning of 2026, we started out on the low end of the scale, immediately moved to highs for the year, back down, back up very close to those yearly highs back in June, and then back down to new yearly lows. The yearly low right now for XME is around 95. But look what's happened just in the month of August. We've started to move higher back up from the mid-90s to 120. And right now just trading underneath 120. Now, if the seasonal trend were to prove out correctly, you can see here that I've got the seasonal trend in green pushing us out to around mid-November. If we just follow the dotted lines on the resistance, that still puts us at around that six percentage points or well. and that's up into the high 120s, about 128. All right. So when you add it all up, all right, when you add everything up on XME and you look at the market summary that I want to talk about this week, number one, what are we saying? Don't fight the Fed, right? Don't fight the Fed, as they will continue to create ways to increase liquidity. We just saw it happen last week, and it's starting to spill over more into hard assets. And speaking of hard assets, leaning on assets like energy may prove right as we head to the holiday season, because by the time we get to mid-November, you know what we're all going to be thinking about? We're going to be thinking about Thanksgiving. We're going to be thinking about Christmas. We're going to think about every holiday in between, and therefore, that is the area that's going to be on our minds. Where are assets going to be? Well, if seasonality has anything to say about it, energy, the XME energy sector, may indeed be higher as we head into that area. And for those of you that are option traders, one more thing: implied volatility rates, right? The implied volatility rates on XME, well, they are lower than average. That suggests that the options are cheap, all right? Which suggests to me, if I'm bullish on something and I got cheap options, then buying calls or even buying those call spreads, all right? Calls or call spreads may prove to be the right option strategy. Welcome to Patterns of Profits. I'm Tom Gentile, America's #1 pattern trader. If you've ever felt caught in the emotional chaos of market headlines, trading opinions, and meme-driven hype, well, you're in the right place. Here, we trade patterns, not panic, with a focus on profits, not predictions. Here's just one of my repeatable strategies I've used for over 10 years now. It's a seasonal calendar looking at the best days to buy and sell the world's most popular stocks. I have millions of data points over decades of stock prices showing me specific stocks that have a 90% or better historical probability of profit. Adding options on top of these patterns, and you can supercharge your potential returns. And with this kind of data, pattern trading isn't about predictions. It's about probabilities. And when you follow historical seasonal patterns like me, the market becomes much easier to navigate. Subscribe here for tons of videos on high probability stock patterns. And if you want more, scan the QR code above or click the links below and get my daily newsletter. Welcome aboard. Look forward to working with you. Hey, all right, welcome back, folks. Welcome back to Patterns of Profits. I am Tom Gentile. Glad to have you hanging out here with me. And you know what? I made a little boo-boo. I got to fix it. XME is not energy. It is actually metals and mining. That's okay. Everything else is correct. Anyway, my bad. That's what happens in a live session. So anyway, guys, XME, metals and mining. All right. And like I said, the charts are right. The options are right. I just poo-pooed the actual name itself. But anyway, like I said, here, that's why you're here. You're here not only for, when I most of the time get it right, but every once in a while I will throw something out there and I'll go on a live tangent and there we go. All right. I want to talk about year-end stuff with you right now. So let's go ahead and switch gears. All right. Here we are as we are heading into the end of August. And so we've now got 8 months, count them, 8 months behind us now for 2026. And we are moving into now the final September, October, November, December months for the markets. I want to talk year-end numbers with you. And I also want to talk about not only the year-end numbers for the markets, but I want to talk about the year-end numbers for something we've been doing, which is cycle trading, seasonal analysis, because that's really where I want to go with this. So hang out with me here for a moment, and you're going to see right now the them versus us, all right? The buy and hold crowd versus the seasonality crowd when it comes to the market. So the first chart I have up on the screen is the chart of the DIA. This is the Dow Jones Industrial Average ETF. And as you can see, since April, all right, since April, down here at the bottom, the Dow has rallied nearly 20%. But when you look at it from the beginning of the year, we're up about 10.5% so far if you were on the buy and hold area, buying and holding DIA. Moving forward, and if we were to look at, say, the S&P, it's going to be similar. If we look at QQQ, going to be similar. They will flex back and forth, and I want to talk about those here in just a few minutes. But let's talk about the bond market because, for me, I like to look at stocks, bonds, currencies, commodities, and we're going to take a look at those high-level ones here for the year ends. The bond market. Bond market saw better days back at the end of February, right? Since the highs that occurred on TLT back here in February, the bond market has really created these higher lows and higher high scenario and have come down. And, even despite the gap that we saw last week when the Treasury Department decided we need to make a change to and expand our long-term buybacks on treasuries. We saw that immediate jump, and we've seen the bond market pull back since then. Bonds are down 6.5% year to date. So for instance, if you're a buyer of bonds, if you're buying the bond market, it's been down ever since. In fact, I believe if you go back 5 years, buying bonds for 5 years, you're down. Buying bonds for a decade, I believe, you're also down over the long term. So the bond market's been a very tough area to be going in and actually buying those treasuries. I'm not talking about the yield you get from them, but the buy rate, all right, as that price has moved lower, not only throughout this year, but many, many years before us. Moving forward, this is the reason right here, all right, the U.S. dollar index, all right, that double dollar U.S. index, UUP, well, it saw lows in January down below 26.5, and it saw highs just last month at near 28.5. It's pulled back a little bit since then, but the big mystery is, why is it moving higher? All right, why has it moved higher with the stock market moving higher? That's the real mystery. And so although it dropped last week, all right, to what we see as multi-month lows, it's come down to the lows that we saw in June. It's still seasonally strong and is up 5% year to date. So the dollar, the U.S. dollar, cash has been strong for the better part of this year. USO, really the undisputed winner right now, up over 90%. That has a lot to do with continued tensions in the Middle East. And, even now, we're starting to see bearish seasonality in oil, all right? But that's seasonal. When you look at what's going on in terms of tensions, that could cause the seasonal bearish pattern to maybe not be eliminated, but we may not see the kind of drops that we're used to, although we could be one piece deal away from resuming a potential downtrend in oil. Gold is up year to date, right? But look what it did back in January. When I say it's up year to date, I'm not talking about, this was the year to date high. This is where we came into the year, and here's where we are right now. The January high, I mean, we're still double digits off that move, even though we've seen since the bottoming, the year-to-date lows that have happened in June and July, we've seen we're well off those lows, but not a big move when you take a look at gold. And Bitcoin, yeah, we've had huge gains in Bitcoin over the last week, but Bitcoin's down still double digits as well, even with those gains that we've seen, which are, well, I've gone back and researched, the largest since Trump has taken office. So when you add all of this up, when you're as a buy and hold trader, here's some things. The Dow, the S&P, and the NASDAQ, well, they're all up about 10.5%, 11.5%, and 15% respectively year to date. Again, Dow up 10.5%, S&P up 11.5%, NASDAQ up about 15%. Gold, silver, and Bitcoin are mostly lower year to date when you look at the three together. Gold's up a little bit, but silver's down on the year, and of course, Bitcoin's down as well. Oil, biggest winner, up over 90%. And here's another takeaway, which is interesting. When you look at all the stocks in the S&P 500, only 65% of them are positive for the year. So even though we're just coming off of all-time highs, the stock market breadth, all right, that's the difference between highs and lows coming into the year, is not telling the same story that the overall market is telling us. So let's talk about the difference between the buy and hold trader and what it is we do as pattern traders. So what we do as pattern traders are a pattern trader is what? A rules-based trader that looks at rules and implements them with entry and exit techniques as well. What we've been doing in our year-to-date numbers look like this, all right? 90% test, 92% result. What does that mean? All right, I want to explain that because right now we're seeing a 25-2 record, which is a 92% win rate and over $5,188 in profits. Let's break that down so that you can all get an understanding of what it is I'm talking about here. All right, so again, this is a seasonal strategy. This is not buy and hold. Remember, we looked at August being on the yellow side of the market. That means we're seeing and when we get yellow on the screen, we see just as many bearish opportunities as we do bullish opportunities, so we can go in both directions. And September, this is a month of September you see here. I thought I would leak this out to you guys a couple weeks before we get into September, but September starts out the same way that August ends. We don't start to see green on September until we get past the halfway point, all right? So knowing that, what are we doing? We are going in and we are curating this list. We take from thousands of stocks, we're down to hundreds of stocks because we need liquid stocks, we need stocks that have data, and we need to be able to mine that data and find these patterns that are these anywhere from 30 to possibly 90-day patterns. And from there, find those ones that have the most bullishness or the most bearishness based on seasonality. So I like to say it this way. I go to a date, and from the month, I go to the day. From a specific day, I then will look at an opportunity list of stocks, and from those, I will vet out what I believe to be the best pattern based on what it has done over the last 10 years. Okay, so Stock Cycle Trader is it really is our most popular, all right, our most popular seasonal analysis piece. All right, we do it on stocks and ETFs. It's designed to, like I say, identify recurring seasonal patterns across those stocks and ETFs. We focus on historically favorable seasonal trading windows before they begin, and we deliver actionable recommendations with defined entry and exits. This is not buy and hold, right? So again, what do I need to make the cut? I need at least 10 years of market history. I need a pattern that's worked at least 9 of the last 10 years, and that's where we come up with that minimum historical success rate, okay? From there, that's where we're picking our trades. We've got these trades that are on that average of, say, 30 to 60 to 90 days. And how have we done this year? We've had 25 trades so far this year that have closed. We have open positions, but trades we have opened and closed in 2026, a 92% win rate on those closed stock pits. 23 winners, 2 losers, 92% on our stock picks that are seasonal. All right, some of our big winners, and I want to share those with you. Oracle, we had a 31% gain on the stock from the open to the close, from the entry to the exit on that pick. 19.5% on Sienna, 17% on Tapestry. Let's take that Oracle trade for a moment, and let's talk about what Oracle's done over the last 10 years. It's had about a 13% per year return for the buy and hold trader. During the seasonal pattern that we've taken earlier this year on Oracle, in 6 weeks, that 6-week pattern produced on average 31.72%. That is a 2.4x return when you look at Oracle's annualized return versus our 6-week return. I didn't annualize our 6-week return. I'm just showing you what the stock does in a year and what we can do with it in 6 weeks. That's a 2.4x return on this particular trade. All right. So for those of you who are new, how can you get involved in this? Because we do have a core group of members that have been with us for years with Stock Cycle Trader. This is just a couple of the testimonials are out there. We have tons of these, but I've got something I call the 915. I call it the 915 program. This is for those of you that are brand new with us. All right. What's the 915 program? The 915 program, I'm going to explain to you what that is here in just a moment, but I am going to put a link into the comments section. There's also a QR code just above my head that I'm going to be talking about too. So what is the 915 program? Well, this is everything you're going to get when you join today if you want to be part of Stock Cycle Trader. All right, we have a weekly debrief. This is something where I reveal top money calendar patterns and developing opportunities. You get up to 5 patterns every Monday, right? We also do weekly trades where I pick from that list, and we'll find those trades like the ones that have produced a 92% return across those 25 positions we've closed so far year to date. Also, there's a 7-part cash course that comes with this, and this is on-demand trading sessions, and you can see exactly how I find, how I qualify, and how I trade these 90% historical money calendar patterns. We're also giving you a free subscription to Patterns of Profits and 3 exclusive special reports that I've created just for this particular special. Here you can see what I call practical pattern trading strategies, seasonal timing, and risk management across all 3 of these reports. Right? Also, this is something too that we're offering as part of this package, my Money Calendar Scannable Watch List. This is an app, if you want to call it that, that will show you how we dial down from thousands of stocks to the 354 that are on my watch list right now. 298 stocks, 56 ETFs and funds, and you have access to this unique application that will allow you to go through and scan and see exactly what I'm doing and what I'm using to create these trading opportunities. So everything that you see here, folks, all right, you have the Money Calendar Watch List, you have the debrief, you get the 7-part cash course, you get the 3 special reports, and of course, you're getting all of this along with my weekly trade opportunities as part of the 30-day money-back guarantee, which means if for some reason it doesn't work for you, you just simply call our office or email our office, and we'll give you a prompt money-back return. So what is this 915 offer I keep talking about? Well, you can get all of this entire package. Your first month is just $9. After that, it is $15 a month. All right, this is one of the best the best packages that we've ever put out there. This is for all of our new traders, so we'd like you to take advantage of a fantastic special. First month $9, then just $15 a month. So guys, you have just seen, all right, you have just seen my 2026 Stock Cycle Trader record. 25 closed trades, 92% win rate. And you know what? It's incredible what the power of pattern recognition does. Now, I can't guarantee what's going to happen on the next trade. Nobody can. But it does show you why I'm so selective about the patterns I follow. And if you'd like me to do the work for you every week, then join me in Stock Cycle Trader. Like I've shown you before, I'll send you my weekly trade recommendations, entry and exit instructions. You get the weekly debrief. You get my 7-part cash course. You get these 3 special reports, complimentary access to Patterns of Profits. You also get my 2026 Money Calendar Watch List, which is a searchable database of the stocks and ETFs that are on my radar. You get to see what I'm tracking and how I plan to approach these opportunities. Now, we just launched a brand new introductory offer to those of you that are new, that want to be new members. So to join us, all you've got to do is click the button on the screen. You can click the QR code, or you could click the link that is in the comments and detail section. Remember, every pattern that I consider has to meet my 90% threshold before it ever gets my attention. So far in 2026, 92% win rate on our closed trades. And again, like I said, it doesn't tell me what the next trade is going to do, but it does tell me what I keep doing and what I've always done. Follow patterns, stay selective, manage risk. All right. Click below to join me inside Stock Cycle Trader. I want to thank you for being part of the program today, and have a great rest of your day. I'll see you again on our next live session. Bye now.